Hello and welcome. It is the 13th day of September, and the year is 2019. My name is Derek, and this is the Money Charts channel. All bets, trades, and of the like within each his own risk and their own reward. On September the 5th, price action down 4.57%. Next day, it was down 2.5%, and then a small 1% down day. Decent sized down day today, down almost 3 right now. And it's 10:30 p.m. There's still some time remaining, and price action should go below 1740. I'll get to why in a little bit. And that's an at least situation. I'd be surprised if we don't. Another way of saying such. Before we get into those numbers, let's just talk about first off, okay, clear break of this level of support. That also means we're now at levels not seen since August 26th. We're even moving to levels soon last seen even since August 23rd. Okay, 31 minus 23, that's 8 days. And we're on day number 13. We're pretty much at 3 week lows. We were talking about going at like 2 year highs before, multi year highs anyway. I think maybe 3 years, whatever. We'll get to that in a bit. But now we're having these reversal of trends. They're going to happen. When we see this on the daily chart price action from the last low, well, we had a high, we had a low, we had a high, we had a low, we had a high, we had a low, we had a high. Well, technically, it's still a high or low. It's got to get below this, but it is still a major move given the fact that the size of this leg higher was pretty good. That was pretty okay. That was huge. So markets went up a little too much for the. So you know it should have stopped going up around here. And technically, you can even count this as a low too, I suppose. And it has, of course, went below that after this consolidation. Obviously, broke to the downside. If you put in trend lines, it's a no-brainer that this trend line broke. But now, as I look at that, and I didn't plan on talking about trend lines at all. I don't think I need to. I'm not going to draw it in because even though that's a terrible drawing, there's no way this, and this connects at the same rate of ascent, or that it has to go a little bit even bit more further. Obviously, something if you're interested in it, something you need to draw or research someone else who does it for you. Okay, so that's one part of technical analysis, and people even state, "Oh, you know what? Technical analysis doesn't work." And guys even say technical analysis doesn't work in a manipulated market. Some of them, but it will work in a free market. And in answering, especially the first one, all the questions, I have to state really two reactions. One, you just say nothing. Maybe you give a interesting face expression along the way, and you'd be thinking, really? Okay, okay. And another way of looking at it is, well, if you don't know how to use it, of course it's not going to work for you. And the whole point of this manipulated market stuff, well, when you got data analysts looking at patterns and algorithms and mathematical calculations and doing all those types of things with previous times, manipulated markets have moved. And they even go through situations that have good sample sizes. Oh, 317 times this happened, and the result ended 215 times this way. And the other times that it did this, and that, and this, and that. And of those 215 times, the worst times look this way, the common times look that way, and the really good times look this way. Or 17 of those 215, this happened after the fact, and then 3 of the times after that 17, this happened, stuff like that. And those who do that type of research, well, there's a reason why they should be ahead of the game, as in ways that they are playing it. Looking at this on the shorter term, single hour time frame. This decline, of course, have an excitation and a significantly large one at 9 o'clock this morning, 10 o'clock in that area. No support at this key level of where it came from at 17 and 3/4, and right now 17 and a half. And as I'm stating, I'm expecting 1740 and it appears below that number extra. Long story short, it's Fibonacci. We'll get to that in a bit. But before that, from this high, you have this thing. You already had significant selling from that, where lower low, constantly, yada yada yada. I'm not going to continue drawing more lines, but this happened at the end of the previous week. So I ended last weekend saying, okay, you got a lot of time to just understand this whole failed breakout kind of deal. Because oftentimes for failed moves, has fast moves lower. And see what happened here? We had this support and it went down here. Now I talk about the three little bears in the market because that's a story I remember as a kid, one of like 16 or 20 or whatever, where you had like stuff books, little children books that you read, and back then it was VHS tapes as well as stuff that you would get on your antenna TV channels. Anyway, throwing that aside, yeah, your porridge, your bed, oh, it had to be not too high, not too low, not too soft, not too hard, not too. And in this case, and in their cases, not in some cases, whatever, not too big, not too small, but just right. And this is what I would classify as too small. That's not a big leg lower from where it came from. But what happened after this leg lower? And when we go into Fibonacci, it's going to even look even more bigger when we do the calculations for it. We'll get to that again soon. But it resisted this level, which does coincide with Fib. And then it does it again. This failed breakout in here. Oftentimes from failed moves will create fast moves. Well, this move to this move most certainly would deem itself true. In yesterday's video, I did a little bit of comedy using Britney Spears, a couple of her songs and a little lyrics. I really didn't, but I sort of sang, but not really. I tried to do a combination of both. One of it was easy to do it with, and I did it well. But that was in last night's video using silver charts using comedy humor. I didn't get as many views on it as I thought I would. I was hoping to get over 1 to 200, and it's at like 50. The video on it, silver charts using song parody humor. 10 minutes, 45 seconds, only 51 views. And I was wondering, I'm thinking, well, am I going to have like 130 views and like 18 thumbs up and probably 2 or 3 thumbs down? That's what I was expecting. Obviously, nothing near that like. But I was referring to this move within the parody as well. And the whole oops, I did it again. So, anyway, technical analysis doing its thing. So for this failed move here, just because it didn't have the fast move didn't tell you that this was the low it was going to. And I want to clarify that more when we talk about the Fibonacci. High divided by low. I'm going to use this low in here because this is where it broke out from. I think the only two lows I would want to use it with would be this, well, as other ones for longer term, but not really. This one, I'm going to get back to this chart in a bit, but I'd also be using this low here as well as one of them, but not really because I would use it with this high here. And we're still in the retracement mode because part of Fibonacci is, okay, well, you have a key low, a key high. You have to break it to one side or another. So in this case, you got this low, you got this high. What are you going to break? Well, yet has yet to determine it. And we keep on being in a retracement between 0 and 100% until it either breaks it up here or down towards that level there. Back to the chart in here. So I've already calculated the Fibonacci. The high is $19.65. The low is $14.30. High divided by low. And then I put it to the root of these numbers, 0.382, all four of these. I'm not going to be focusing on the 23.6, but I will be focusing on the other three. So first, we're going to focus on 76.4%. That comes in at $18.23, which represents 23 to this 0.6 going down, 76.4 going up. So let's put a line in at that price variable point. And let's get it in at exactly that and go back to that single hour time frame that we were in before. There we have it. And just see if this really did much at all. Oh, yeah, it did, of course. It was huge. So from this high, Originally, price action came down here at 1 o'clock in the morning on September the 6th, and this is Eastern Time. Congested there for a little bit, had a small failed breakdown below it. But ultimately, what happened after that was that major failed breakout just recently talked about. But what did it do after the fact? It resisted it right after it. After it pierced below, matching this low here. Did it again. 7 o'clock on, because this was on Friday this happened. So it started the new week off, resisting it twice on the early week. And then it established that new low, but I mean, it wasn't much of one. Comes down, resists it again, so but successfully looking to correct it. And there's that failed breakout above that key Fibonacci line, above the 18 average of highs, coming back down, and then this resistance was a pierce below, and of course, down she goes from that point further. So as I stated at the start, I'm expecting it to go below 1840 because of the fact that it has broken down the way that it has, is broken below this resistance level. I don't know how much there's going to be on the way up before we get there. I'm not thinking too much right now because I felt if we would hit, I mean, there's two ways of going to there. The 1740 handle, that is. One, you just go there quickly, which is what it looks like it's doing. Or two, you do so by maybe going partially the way there, like 30, 40, 50, 60% of the way there. Then you come back up, usually where you came from. In this case, it'd be between 1770 and 18. And then you go back down to that level. But I haven't seen anything on here yet showing me anything of this market showing any signs of even any type of, yeah, okay, whatever types of moves. So it looks to me throughout the rest of this day, or just one of those signs that I can clarify better on the weekend, that will point into Monday, that we're going to be at an interesting, okay, here we go spot, and I'll clarify it better then, but it looks like that 1740 number again will come into play. 1615 after that as the key level, as a 61.8% level. Now let's take a look at it the rest of the way using the long-term time frame. So in the triple day, we have the price action coming down to into this 18, but I really have the triple day mainly for cryptocurrencies because the reason why I got this in the order that I do is because, sort of like poker chips, if you are playing a game, you like to have your denominations, each one a little bit higher than the rest. 4 or 5 times has usually been my favorite. So the one of the four, that's a 4x difference. That's about a 4 times difference from here. 4 times difference from the 15 minute to the hour, which then leaves a 3. Small gap in here, but that's just to do the gap between the hourly and the daily. 2 time frames I have to always have. And then the daily to the weekly, 7 is just a too large of a gap, which is why I have the triple day. And then weekly to monthly, that's about 4, 4.2. Monthly to quarterly is 3 times, and quarterly to yearly is 4 times. So that's why it works in that type of order. Anyway, let's go to the weekly because of that. On the weekly, we still have a long ways to go. The 18 average of highs comes in at about 1711 and appears below 1740. Would basically, it could be even that. And even that, the 18 average of rising heading 18 average of highs heading into Monday, because there'll be a new week coming after today, will be also rising with it as well. The 18 average of lows, let me just get these numbers in here so we get the, I mean, again, it's going to be rising. 18 average is rising from 16 and 27 cents on this. And with the move that it had, there was your, you can call it a double bottom, I suppose. I mean, close enough. That's a large pierce above from this double hit low here. But a significant move there after the fact, and relatively fast as well. Highs and lows are known after the fact. So obviously, this is well after the fact talking about this and this high. That's done. It's quote unquote set in stone, although we're decades removed and many more from the Stone Age. This high, it's known after the fact. Because what happens if this is a bottom? Let's just say next week we have a green candle that moves up like this or something like that, and then we go up like that. Then I guess suppose you say, well, maybe you would call it a low. And if it goes deep enough, that's exactly the point. So you're close enough to calling it a low, but maybe you need to see. Well, I need to have it hit the 18. If it doesn't count. Well, then the mathematical conditions wouldn't be true. It just means it's close to being the point where it's such a large decline you got to count as a high, at least within this time frame. The must hold area pretty much is in this area. You can see that's 1588. Again, the Fibonacci is 1541. So piercing below that is like, okay, yeah, it's in that same general area. That would be your must hold area. And I think that it will. When we move it over to the monthly chart, and I've been talking a lot about this in here, which is why I'm going to have to bring up this Fibonacci from here. And I'm going to do a bunch more as well. I guess it's a bit longer of a video than I thought. Yep, that usually is the case. Because I always think of new things that just come to me, even though I've done this and talked about it many times before. So the failed breakout comes in here, but it corrects it successfully, and we're having another attempt. And so far, so good. 18 average of highs on this one. The month, of course, still being live. We're near the halfway point. It's 1642 and 1513. So the 1642, it coincides with the low in here because that would be small pierce below. And that's your 18 average on the higher end. But ideally, what you want to see happen with this is you want to see if it's not going to break out yet, of course. For just a hold, like 1, 2, 3 periods in this area, staying above 16, staying above ideally this resistance, which means letting it price action of the 18 lows come up to 16 over 16, so that it would meet in that form. It's live at any time to keep on going up. Just because it's red like this, well, all it takes is one decent buy spark on the short and intermediate term time frames to really change the attitudes and how people will be looking at things along the way. Okay. So as far as the next time frame, which will go on the quarterly, at this stage, it was an attempt to break it out, and it's back at the top of this band. The band has been firmly flat, and price action to me is still at and obviously more so $2 off, at a very cheap level. As long as it's stuck in this range, it becomes cheap. So back to the Fibonacci that I wanted to talk about, because it really doesn't mean too much, but I do want to conclude this video as at the same point as well. I guess the weekly chart is the way to, or maybe the 3-day, no. What's the Fibonacci that I wanted to do? Yeah, it would be this high. So we had this high at 21.26. Had a low at 13 and 60, I think. 13 higher than that. 1378 I'll put in. 18 and 16 and a quarter. So let's put those lines in. And the other one. So the story so far, one, this high came in the summer of 2016. The low came in around Christmas the year before. It was a 6 plus 7 or so month run from low to high to determine the range of the trading platform, the retracement. And because the high was on the summer of 2016, well, it's been a long time since the post point, because we are in September of 2019 now. So 3 years and really entering 3 months now. We're close to 40 months in, after it was about 7 before. So a very long, dragged out period of time. And one way of looking at long, dragged out periods is when they happen, that can oftentimes mean that the move can on either side can be even more larger, more decisive, and anyway, that's just what I'm going to say on that part there. So as far as how these key lines have worked out, well, for a large variety of the time, the price action stayed within the neutral stage because everything from here or from the high to this line represents bullishness. Everything below this line to the low represents bearishness, and while you're in between, it's that of neutrality, indecisive. So none of the clear breaks above these resistance ever happened. There were so many attempts for it to happen, but ultimately every one of these failed to attempt to get out of the neutrality range. This one didn't. It retested previous low by having a noticeable pierce, barely noticeable pierce above, but obviously that sell-off failed, at least for now, and most likely will. So you do your thing, resistance here. That's both bullish and bearish. I've said that so many times in these videos. Well, obviously in this case it was bullish because it managed to hold where it came from, although it went a little further than I would have liked. But that's what it did. Congested at this level of resistance very, very nicely. So it got back to saying here, okay, we've been in this range for a long time, but and when you're at the and when you go from into the middle part, that just means that you can stay in this range for a while because you got a long ways to go before you either break resistance or support. But you also realize it only took 7 months to go from the lowest to the highest level before that. Really, you could get out of it on either side in that period of time. It could happen. But anyway, so we exited the bearish territory. Something had entered in the summer of 2018 and something had exited the summer of this year. So 1 year of bearish action and a very short period of time of neutrality with the attempt to get back into bullish point because it didn't resist here. And that in itself is like, oh, interesting. Okay, we didn't resist where we were supposed to. I mean, we are right now on a higher aggressive, higher I was going to say manipulative, but that's not the word I want to use. Higher volatile level. And that's something you want to see for this market moving forward because at least I do because in order for things to get wild, if you want to see 100 triple figures, even 4-figure silver prices is major volatility. But in a situation like this, it can be an explosive pierce above as resistance still. That's something you still can't discount. But in situations where if it's able to congest in here, and congest means going above and below, something like this, that in itself would be a good sign moving forward. And if you play the high volatility game, that means you have a big high here, maybe even have a low down to wherever here. And then you just go way up like that and have those moves. Those are part of those situations that can very easily occur as well. But the big area to look for it here, we got the 60.25. That obviously coincides with this level here, which is actually, wait a second. I was looking by previous one. Never mind. That's 1640. I think was the last number I had from before. That's why I was thinking in my head. And I'm actually not good at memorizing numbers or remembering numbers too well. But yeah, I'm not done with Fibonacci yet. So let's look at Fibonacci next from this high. I don't want to count this low. I'd rather count this low in here, and I will in a bit. But Fibonacci from this high, which is the $50 and the same lows that we did before. So that'd be 1378, and it's 49.81. Like I said, I'm not that good at memorizing numbers. 49.81. 846, 2135. I think this is 1640. No, I'm 1470. Anyway, yeah, so 846, 2135, and 49.81. I happen to memorize those three. Don't know why, other than the fact that I follow silver more than any other metal historically. Okay, 2251, 3049. So 1866 is that first level, that 23.6. And it is just having a long, long, hard time getting over it. Obviously, it was resisted in this level area, and it's doing it again. So the whole attempt in breaking out above this, you can see you don't even need to have Fibonacci for it, but just breaking above this level, you should have a decent sized move. And then those two key levels I'd be looking at are 22 and a half and then 30 and a. So 22 and a half. Now here's the interesting thing about Fibonacci. I'm going to put the 22 and a half in here. When spots like this happen, this is where I usually would expect that it's going to go right up to 61.8. Also, with the fact when I talk about all those longer congestion periods, when it takes so much longer, you can have a big move because this is it's not really a pierce below, but it's close to it. It's almost there. I just feel that it's going to have a significant break above after resistance at this point. That, and I've seen this a few times. If it looks like this, I look at the 76 or excuse me, the next one, which happens to be 61.8 rather, and that would be 30 and a half, and usually piercing above 32 is a key level as well. So I would expect it to pierce above to 32 if it's going to break above this level. Just a fast move up to here would be one of those big probabilities. So I got two more sets of Fibonacci, two or three more sets of Fibonacci left. The next one is going to be from these nine. It really makes. I can make a case for using these lows and these lows. Either way, it's just going to make the lines are just a small microscopic difference as it is anyway. This low is 355. We'll go. 76.4 works out to 2671 and then 1816. So 2671 you can see which was support majorly. I mean 26 was like 3 or 4 times X. And then this $18 level's been where we've been congesting and consolidating for the ever since 2013. It hasn't went too much below it because below that, well, that dinks it down to a bit below 10, which happens to coincide with this 846 number. So it's basically had a 38.2% correction from this level. Let's go to the 3-month chart. $50 high. We've already done that one already. So there's one more. Yeah, lows of 1.25. We have $1.25 here. That was the low. And then we'll use the $50 high pretty much. The highest number I found on the LBMA was 50.50. I've even heard that it went to 52. So on the way down, we had key levels at 21, 12, and 5. 21, 12, and 5. So the price action, again for time, October 1971 was the low, and January 1980 was the high. So that would work out to about 8.5 years. Well, since January of 1980, we are looking at nearly 40 years of time. We're only a little over a quarter away from it. So again, we're not one of those situations in which price has had a very, very, very long retracement value within high and low. And it looks like it barely pierced above this. I'm on the opposite end. I believe it barely pierced below it. And that's on a nominal turn. And then, of course, inflation adjusted, even this high is now getting close to 60. But we won't talk about that for now. As far as these nominal numbers are concerned, it still looking to get above it. And same thing, break above this resistance because of the longer Nominal consolidation time gives you reason for it to be big. Then you throw the inflationary fact on how much more this has been devalued due to that. There could be, just looking at this on a technical level from that aspect, high probabilities for the reasons for those explosive moves. I'm going to try to rewind this back to see what this looked like on the daily. I don't know what I'm going to get, so I'm going to pause the tape and just see. Because I want to look at how, I already seen it before in the past, but I want to focus on these Fibonacci's. You can see how well they've been doing, though, just by looking at it from where all the key lows and highs have been. So what I can do is I got this on the daily, just backtrack it like this. It looks like it's not going to take too long, and it should work. Whether they'll give me all the days back to then, that would be nice. And I think I might have done it before and it just looks funny. Maybe I'll... Because I only had one tick per day when I downloaded the data from the LBMA, so I had one closing price. And I had two closing prices for most of the time, I think, with gold. I think they did an AM and a PM fix. But just to have the closing prices, and I've had them since, like, well before the start. So, okay, yeah, I can see those little dots as they were moving. But, as you can see on the way, at least via this, there wouldn't have been too much resistance on the way down, or support rather, but there was resistance. Really not much support at this. So that tells you when you see this, oh, we were supposed to probably, wait a sec. Oh, obviously it did support it. Let's just throw that out. It supported it here. Right this point. So yeah, the first support test it did. It resisted this level, so Fib doing its thing. Then test 2, well, this one didn't succeed. Resisting it, probably piercing above, but these chart data is whatever. Having an amazing, right at that level. And then you see this in 1983, you're like, oh, wait a second, optimistic time. Yeah, optimistic because we're not resisting this, we're now congesting within this level. But what do you see? Symmetricalness. Higher lows, lower highs, and then the symmetricalness falls to the downside and concisely. And then as this is going on, well, yeah, we're going back to 502 and probably piercing lower. Yep, there we are, back down there. Okay, there's our bounce. Ooh, now if we go down there, we could be going lower. Nope. Have a good move, but not quite to that fib level that we were at before. That was a bit. Look at the size of this failed breakout then. In 1987, you go from like 558 up to like 937, and now you're in this long consolidation again, and back down to the 5, and now you have a decent pierce below as we're testing these like $3 levels. I like to be buying silver at this stage, and well, let's just put it this way. People talk a lot about, oh, you know what, when silver gets so high, how are you going to sell it? Well, how fun would it have been selling it? Throwing in this fact that you're selling for bad prices, but how easy would it have been to sell it back in here? The fact that there wasn't much demand makes it difficult, and the fact that the price is going up is because of the demand. Okay, so now we're back at this level in here, and, well, not resisting it because going down below further would have meant you're going to like $2 or something. In fact, that something would have been $3 actually, pierced below. But it didn't do that, though. Although close, it was $3 and high change. So now you're just congesting at this fib line. Another move up here, 1998, but I mean, it took a long time again because major congestion above, now going below it. Another failed breakdown, this $4 level, resisting it here in 2002, twice in that matter. And then things started to break out. You had a huge, monstrous move, but you've seen all these failed moves. We've been up to this $8, $10 twice in the last decade plus before. Higher lows, reaching it almost above it, and now things starting to change. A lot of these higher lows, you had a nice ascending triangle that you broke out of. You got back to this line. You got above it. You didn't resist it. You supported it. You got back to it again. Didn't go above it. You went below it. So you filled this empty space. And higher lows are important after this. You can see what happened when it did make a good amount. With a little bit of a failed breakdown, but all the congestion that it had within this area. The fast move was to a high nicely above it, going back and forth, and later supporting it practically perfectly with a failed move below it. And then resisting it on the next big fast move, realist, pretty much perfectly. And then what happens here in 2008? Failed breakdown. Doesn't support this, goes all the way down to, I have 846. This goes a little bit lower. And after breaking this 20 mark, well, it goes up to 50, consolidates there, resists it. Well, that's what we're waiting to get back to again. I guess there's a quick story from the top to that of where we are today. And when it comes down to it, have this low, you have this high, you have all this time. So within this long process, by establishing this huge higher low to this major key level, having what normally would have a fast move here, normally that's what you'd want to have happen occur as well. That if you get above here, literally these levels, I've had one person comment about they think my level is just way too aggressive where like 100 or 120 something should be, and I think 120 is way too small. And I can use this, what I'm going to use is Fibonacci from this high and this low again. I'll use the 514 because you have, when I look for Fibonacci upside is I need a key low and a key high, a very good price correction both through price and time, and this just amplifies largely both of them. And then I'm going to take this level. So generally speaking, I'll just take the 61.8% level of those two moves. So I'm going to look at the upside target. And this says 500 bucks. This is going to be lower than that, but it's still going to be, I think it's over 200. Yeah, $207.28, probably piercing above it. So just a yada yada decent move should come up to here. And then now what situation? Do we do something like this? Or do we not find resistance and go to four figures? Those are the types of things I'd probably be talking about on situations of reaching that level. But until then, we still got the retracement of all those different levels I talked about. This one to this one, this one to this one, this one to this one. Thank you for tuning in. Have yourself a great day. Bye-bye.